Hello, so I haven't covered the perennial disappointment that is gold for a while, and I felt the metal is overdue some attention, so that's going to be the subject of today's missive. And I say perennial disappointment because gold should be so much higher. But in any case, it's summer. Usually the best time of year to buy gold is in the June to August time frame, so perhaps it's time to allocate some funds that way. And I stress, usually, not always, a summer low in gold is frequent enough to be noticeable but not consistent enough to be reliable. A bit like an errant teenager's mood swings. But in terms of price, the high for the year gold was $2,080 per ounce, printed in March, shortly after you-know-who invaded you-know-where, and the low for the year was $1,780. That came in January, and we also came close to that figure in May. Today we are meandering around the 1820 mark, which is also where the 52-week moving average lies, and that's quite a telling little fact, because for all the declines we've seen elsewhere in stocks, bonds, crypto, and the ensuing erosion of wealth, gold sits at its one-year average. In other words, it has done what it is supposed to do. It has preserved its value and preserved your capital, or the capital that you allocated to it. And that's where the US dollar is so strong. Gold has been doing better than you think. It's actually done rather better against other currencies. And this chart that you're looking at now shows gold in dollars in red, but also gold in pounds in blue, Japanese yen in green, and euros in yellow. And you can see that against all three of those currencies, gold is not far off its all-time highs. If you're Japanese, European or British, all good then. Now here's another way of looking at the same thing. This is gold against 18 national currencies in 2021. It might be down a little against some of them. The US and Canadian dollars, the Chinese yuan, the Brazilian real, the Mexican peso, the Russian ruble. How has the ruble been so strong? But it's up significantly, in some cases, against the others. The Argentinian peso, the Swiss franc, the euro, the pound, the Korean won, the Japanese yen, and of course, the Turkish lira. So gold's price is being determined then by the much bigger market that is the US dollar, as much as anything. And where is the US dollar going next? Your guess is as good as mine. Monetary policy is tighter in the US than elsewhere. It's the first port of call for capital in a panic, and so the dollar keeps rising. Currently, it's at 104 on the index. It could go all the way to 120. Unlikely, but it's been there before, and if it does, gold almost certainly won't be going anywhere significant. But of course, if the dollar heads lower, and it will if other currencies start to tighten as much as the Americans have, then gold will make a move higher in US dollars. And I gather analysts at Goldman Sachs have just put a 2,500 year-end target on gold, and that would be nice. So is gold heading for a repeat of the 1970s? So many comparisons are being made between today and the 1970s. Politically and economically, there are parallels galore. The big difference for me are technological. Technology has advanced, it's changed. Nevertheless, gold had one of its best ever decades in the 1970s, going from $35 an ounce in 1971 to $850 an ounce, albeit briefly in 1980. It was a bonanza time for gold mining. But even with that, in that bonanza decade, gold went through a near 2-year bear market in 1975-76 that saw it fall by nearly half, going from $200 to $100 an ounce. If gold went from $2,000 to $1,000 today, that would be a pretty hard pill to swallow. But here's a chart of gold during that bonanza period. And you can see those declines there in the mid-1970s. But longer term, the fundamentals of out-of-control inflation, geopolitical instability, escalating deglobalization and weak unpopular political leadership all tend to be drivers of flight to gold, but it remains an analog asset in a world where all the value is digital. And it was me that first made this comparison many years ago. It's become a bit of a cliche now, and I still haven't decided what the answer is. But the horse was transport. For thousands of years, it was natural transport. And with the invention of the car, it suddenly became irrelevant. Gold, too, was money for thousands of years, natural money. But with the invention of digital technology, modern communications, is it now as irrelevant to finance as the horse is to transport? Or like King Arthur to the English, will gold return to finance to save the people in their hour of need? I guess until it actually does show up, we'll never know the answer. But from a technical perspective, that enormous cup and handle formation, built up over a decade, here it is, remains in play, and it looks ready to propel gold higher. Cup and handle formations are another of those commonly observed chart patterns, a bit like double tops and head and shoulders, which are, they're self-explanatory. The cup and handle was first observed in the 1980s. Investopedia calls it a technical chart pattern that resembles a cup and handle. Well, thank you very much. But it's considered a very bullish signal. And if it plays out, it will give Goldman Sachs their target and some. I own gold. I'm glad that I do. I may be rude about it, but I love it. And it's the one part of my portfolio that isn't keeping me awake at night. In fact, it's so boring it's helping me to sleep. If you're looking to buy physical gold coins or bars, let me recommend Goldcore in Ireland, with whom I have an affiliation deal. I'll put a link in the comments below. They're competitively priced. You get to speak to a human being. You can take delivery, or you can store it safely, allocated to you at vaults in Switzerland, in Zurich, Ireland, Singapore, Hong Kong, the US, or even the UK. That's about all I've got to say. Buy gold. It sort of doesn't matter if you don't catch the exact bottom or even near the bottom. You just buy gold and you end up holding it, and unless you really need the money, you end up giving it to your kids, which is kind of what you're supposed to do with accrued wealth. But anyway, it's just started getting windy. As ever, I haven't got my windjammer, so I'm going to sign off now. Thank you very much for watching. Thank you for listening. Please subscribe to the channel. Please subscribe to my Substack, and I'll be back with another video very soon.